Hi guys, it's Sterling Spectre here. In today's video, I'm going to be telling you guys how to never miss profits in the crypto market again. Before we get into the video, if you want to support the channel, then I have crypto donation addresses at the top of the description. Any amount is appreciated. If you enjoyed the video, then like and subscribe to the channel. So since we are in a crypto bear market, we have all been feeling that we should have sold at the top of the peak back in January of this year. Well, a lot of people missed out on profits and decided to ride the dip downwards. This video will aim to help you guys not to make that mistake when the next bull run happens. So there are a lot of factors that stop us from taking profits in the market, but the main factors come down to human psychology. If you don't want to lose your money, then you have to have the correct mindset in the space and make quick decisions and plan your exit strategy. So controlling both fear and greed is how you become successful in both the crypto market and the fiat market. There is an old saying on Wall Street that the market is driven by these emotions of fear and greed. Obviously, it's more complicated than just that, but they are a very big part of the market. If you succumb to these emotions, then it can harm your portfolio very much. It will even harm the whole market, as we have seen this in the recent crypto dip that we just had. So let's get into these two emotions and how they work and how to control them when it comes to your personal crypto portfolio. So let's start with greed. Most people want to get rich as quick as possible when a bull market run happens. It encourages more people to get into the market, as we have seen with the 2017 crypto run. At the time, it all seemed that everyone was leaping into the opportunity to invest into crypto. People got very greedy and started investing into any coin that was available to buy. This fuels more buying as the prices surge to excessive levels. Then, when the bubble finally pops, it comes crashing down. This get-rich-quick thinking is what makes it hard to maintain a disciplined and long-term investment plan. In these times, it's crucial to maintain and stick to the fundamentals of investing, such as an exit plan, dollar cost averaging, and ignoring the herd. Just as the market can be overcome with greed, it can also be succumbed to fear. When crypto suffers large losses for a sustained period of time, investors can collectively become fearful for further losses, so they start to sell. This in turn, of course, has a self-fulfilling effect of ensuring that the price falls further. This goes back to investors selling together as a herd. This herd behavior is not what you want to be doing. If a lot of people become fearful, they will all start to sell. If you sell out of fear, you will lose money, and if you buy out of greed, you'll lose money. This herd mentality is what gets most investors. Even people with millions will fall into this trap because they think that the herd is right. So going out on your own and sticking to a plan is what you need to get right first. Now I have explained fear and greed in the market, let's get into how to set out a plan when buying or selling your crypto, and how to make sure you're always taking the right steps to improve profits. I'm going to set out a plan for both crypto traders and crypto miners. For crypto traders, I should first make a distinction on age. Your age will affect how and when you buy or sell. So I'm splitting the crypto trading into two age groups. First is 18 to 27, and the other is 27 and above. This is because the responsibility and risk is different as you get older. This is because of the responsibilities and freedom to risk a lot of money. When you're younger, you have more risk tolerance, and when you're older, you have less risk tolerance. So let's start out with the 18 to 27-year-old group. So as I said, if you're in this age group, you have less responsibilities and have the ability to lose money and still be able to bounce back if it goes wrong. When crypto trading at this age, you can afford to make some mistakes. So this is what I would do at this age. Firstly, when it comes to buying, you have to have that risk. So the coins you choose to buy can be lower market cap and you can stomach higher gains on coins. Then when it comes to the exit plan, you can exit at higher profits and lower losses. I'm going to run through an example of a buy and sell of a coin. So let's take a medium to small cap coin such as Ravencoin. All crypto is at a low right now, so it's a prime opportunity to buy. The price right now is at 3 cents for Ravencoin. So nobody actually knows the right time to buy into a coin, but if you put a plan in place for selling, you'll be able to make profits regularly. One thing I want to mention is that the crypto space can explode and coins can go up 1,000% overnight. This is important when choosing your exit price. To decide an exit price, I normally look back on the price chart for the coin and look for peak prices. So as I said, Ravencoin is at a price of 3 cents now, but had a peak price of 24 cents. This shows that it can hit that price, but that was only at the peak. When it comes to choosing the exit price, I would take the peak price and half it. Then you have your exit price of 12 cents. As the coin's at 3 cents now, it's not unreasonable for it to hit 12 cents. This is a gain of 300%. If you ask me, that's a great gain and you're tripling your money. Now we have our profit exit price, we need to have a loss price. For a loss price, I try to go with a loss of 50%. As I said, you are young, so your risk tolerance is very high. So this is what our profit and loss margins looks like. We have 3 cents as the price, 12 cents as the profit, and 1.5 cents for the loss price. So this is where greed and fear comes in. No matter what happens, you should only sell up to 12 cents and down to 1.5 cents. People in this space will tend to hold on in hopes of it going up more and more, but the greed sets in and you chase more gains. Then in a flick of a switch, the price can plummet. By setting the exit price of 12 cents, it gives us an exact price to ensure we sell. Now the coin could skyrocket after you've sold at 12 cents, but this doesn't matter because you've already made 300% gains and it's a nice amount of profits. If you continue past the exit price, then you're falling into the herd mentality trap like many other people out there. So take your 300% gains and be happy that you did, because the price of that coin could also plummet at 14 cents and then you would have tried to get more profits and lost it all. Now let's move into the 27 plus trading. As you're older and have responsibilities, whether it be kids or a house to pay for, your risk tolerance is going to be lower as you can't afford to lose that amount of money. This is where you play the smart game and minimize your risk as much as possible. Stick to the largest cryptos out there and have very small profit and loss margins. The reason for sticking to large cryptos is because they have stability and the price doesn't fluctuate as much. Now let's talk about an example for the buy and sell. Take a Bitcoin right now, it's at 30k per coin. We're going to be using the same strategy to find our sell price for profits and losses. So if we look at the price chart, we can see that the peak of the coin was at 67k. If we split that in half, we get 35.5k. So our profit exit is 35.5k. Now when we are looking for a loss price, we should go with a risk tolerance of around 10 to 15%. This would put our loss price at 27k. So the price right now is 30k, the profit price is 33.5k, and the loss price is 27k. As stated before, we need to stick to these prices and not let greed set in. We take a nice profit of 12% and the stop the losses at 10%. By setting these prices, we ensure that emotions are never a factor. As soon as emotions take over your trading, you start to become part of the herd. If you want to risk a little more, then fine, but stick to your plan and exit at the right price no matter what happens. Large coins will only present gains of up to 50% right now, so focus on that price range for your profit and loss margins. The last section is for miners. It's just a few quick things, as I know many miners already have things locked down in terms of taking profits and such. So if you're new to mining, I would also have a plan in place to exit at a certain coin price. Normally I choose to exit when a coin's price eclipses the electricity cost. For example, you're mining Ethereum and around 30% of the revenue goes to electricity cost. So basically you hold the Ethereum until the price goes above 30% of what you mined, and then you sell there. I normally calculate this every week. I take the revenue from a week's worth of mining, then calculate the average price of Ethereum that week. Then if it hits 30%, I sell all the Ethereum mined that week. It's an easy way to make sure you're making full revenue. Now I set my stop losses very low for mining, as many of these coins will go up and down all the time. So it's up to you how much you want to risk losing while mining. Remember, when trading crypto, it can be very easy to fall into the traps of greed and fear. Selling at the top can be hard to predict, but selling at the exact point isn't hard to do. You have to really take emotions out of trading and just focus on numbers. Make sure you sell at the limits that you set exactly. Don't let the fear and greed guide you, and don't fall into the herd mentality. Thanks for watching, and let me know if you have any other basic ways to trade in crypto in the comments below.